100% move in the VIX would put us at 50. Do your calculations accordingly, but 2 or 3 weeks could be a nice payout right here on the VIX. So why so many professional institutional investors are hopeful of a rally? Well, maybe we should take a closer look at what they're actually saying is taking. Number one, it's the earnings, guys. The earnings. Man, the earnings are still so good. Guys, come on. Let's get real here. The earnings have been the best for the entire duration of 2018. Did that help the stocks go higher? No, it didn't. Then they scream the fundamentals, man. It's the fundamentals. The stocks are going to go higher because of the fundamentals. Dude, what fundamentals are you talking about? The fact that consumers maxed out? United States corporations are maxed out as well? Everybody's leveraged up to the moon? What fundamentals are you talking about? The fundamentals might have been at the peak, but you don't want to buy stuff at the peak. I know you were probably the same dude that told us to buy Bitcoin last December at 18,000. And now you're telling us to buy the dip. Hell no. Number 3, everything still looks good, guys. We're not in the bear market. Come on, it's going to bounce. It's going to bounce. Look, it's going to bounce. Everything is good. Look, hey, I heard one guy saying the market is going to rally 10% by the end of the year. Well, considering it's the 18th, we only got like 10 trading days. Apparently, I need to get some copies of the charts that this dude is looking at. All right, number 4. The markets have come down so much, they have got to come back up. I mean, are you kidding me? Look at Amazon. It's down 30%. I mean, look at some of these great stocks. Micron is down 50%. I mean, when something is down, when something is on sale by this much, well, certainly it's going to go higher. Guys, come on, let's get real. If that is the reason why someone should buy the stocks just because it's dropped, that's not a really good reason to buy anything, okay? You have to look at the context. Again, buying the dip is a good strategy when the market is in the uptrend and it's bullish market. Right now, it's not. So you don't want to just be buying something because it's on sale 50%. There is a reason why some stocks are on sale 30 to 50%. Number 5, Santa Claus rally always happens. Guys, we could have applied the same analogy to the Thanksgiving rally, or at least the fact that stocks generally don't drop a few days before Thanksgiving. But guess what happened this year in 2018? The stock market literally dropped over 1,100 points within 48 hours before Thanksgiving. That has not taken place in 10 years. What this tells us is that the market environment has changed. Not changing, it has changed. So this strategy of the Santa Claus rally is no longer applicable. And number 6, hey, we're hitting some major support levels and we're destined to bounce higher from here. Now, out of all of these 6, this is probably the most valid one because the support level is going to hold and stocks will bounce occasionally off of the support level. But I'm going to show you a chart right now, which is going to show you why the support level is not going to hold this time. So, by the way, you know who these institutional investors sound like that is still bullish in the market? They sound like Bitcoin hodlers. You remember what the Bitcoin hodlers were telling you? Remember when it dropped from 20,000 to 18, what did they tell you? Oh, buy the dip. Then it fell to 15. What did they tell you? Oh, dude, buy the dip, buy the dip. Hold on, don't sell it. What did they tell you? They kept finding reasons, all these goofy reasons why Bitcoin is going to go to 500,000, 1 million, and so on. So here's one major thing, right, is they were so bullish. I mean, this guy on CNBC, this Asian guy, right? I mean, Tom Lee. Yeah, this Tom Lee guy still thinks Bitcoin, his end-year Bitcoin target is, 15,000. And that's after he slashed it from 25,000. I mean, with Bitcoin being at 3,500 right now, I mean, this guy don't have a shot. Bitcoin is not going to go to 15,000 in 5 to 10 days. And here's why. Because the chart is bearish as hell. Okay, so it was easy for Bitcoin to go from 1,000 to 3,000 to 5,000 to 7 to 8,000 because it was in the uptrend. See, stocks don't bounce 500-600%, or Bitcoin does not bounce 500-600% when it's in the downtrend, in a severe downtrend like that. See, once something drops like that, it's going to take it a lot more time to go back to the previous levels. Okay, so in this case, check this out. This is very important. You see these purple dots right here? Okay, this represents the many times Bitcoin has actually dipped to the level of 6,000. And I want you to observe very careful what happens. So this chart actually represents the entire time everybody's been a bull on Bitcoin while we were a bear. And people didn't want to listen to us at 18. They didn't want to listen to us at 15. I remember putting some alerts out here on this channel months ago when there was around 11, 12,000 saying, hey, get out of Bitcoin. And, you know, people would just add a bunch of negative comments and so on. And you know, people still think that, you know, I'm some kind of Bitcoin hater. Look, I study the charts, guys, okay? I have no personal preference towards Bitcoin or anything else. Much do I have towards Amazon or, you know, any other stock. It's just when the charts show you that you should short the stock, the commodity, the cryptocurrency, then you should short it. And when the charts show you that you should buy it, then you should buy it. So the time to buy Bitcoin has not come yet, okay? But the most important part right here is this. Notice how the first time Bitcoin gets to the level of 6,000. Let me enlarge this a little bit for you. So, you know, I think this is a very important Bitcoin observation from Bitcoin chart. So the first time basically it falls to 6,000, look what happens. Look, it actually gaps up higher, bounces higher, and moves higher back to, like, you know, a much higher level, like 9,000, 10,000, right? So the bounce happens quite fast. Look the second time it hits the 6,000 level. Now, not only does it not reach the same level that it established from the prior bounce, it goes just a little bit higher from the 6,000 range, but also important to know the trajectory. See, it's not that steep, so it takes it a longer amount of time to hit a lower level. And the third time it hits the 6,000, look, here's what happens. Like, it's pretty much almost flat. Now, this is what this actually tells us. So the first time Bitcoin drops to 6,000, people get excited. Oh, yeah. Oh, my God. It's such a good deal, man. Let's buy it. Okay, fine. So people get excited. They buy it. The stock jumps. So oftentimes referred to a dead cat bounce, which is unsustainable. Okay, so that's the bounce you get first. The second time Bitcoin drops to 6,000, people are like, oh yeah, man, it's back at 6,000, buy it again, but not so many people are convinced, so you don't get as many buyers, and it takes a lot longer to bounce even to a lower level. Now, the third time it gets there, okay, people are like, okay, so what's the big deal? Bitcoin is 6,000 again. So people are not even in a rush to buy it. So when sometimes something trades at a higher level, okay, let's say Amazon, and it drops from 2,050 all the way to 1,500, what happens? Well, people get excited. Oh man, Amazon is one of the best stocks. It's been one of the best stocks for the last few years. Oh, it's on sale 30%, so it bounces quick. The second time Amazon drops to 1,500, what happens? It doesn't bounce as quick, and it doesn't bounce to as high of a level. And the third time it gets there, like, what's the big deal? Okay, so Amazon is back at 1,500. Almost nobody wants to buy it. So people are no longer perceiving Amazon as a great deal. And if they're not perceiving Amazon as a great deal at 1,500, it's the same story repeats itself. But we'll clearly see that story in the chart of Bitcoin. So people get excited. A lot of buyers come in. They perceive it as a deal. Second time, not as many people convinced. The less people perceive this as a deal. The third time, nobody cares. And the most important part is what happens next. And what happens next is this. Bitcoin falls from 6,500 to 3,100 in a matter of 10 days. That's what happens. Okay, now, I'm not saying the markets are about to get slashed in half, but this is what I am saying. Take a look at this NASDAQ chart. Does this remind you of anything? Well, it's the same thing, right? So first, NASDAQ dips to this level, Like, oh man, the technology stocks, they've been so hot, so they start buying them. It bounces quick. The second time, okay, to a lower level. The third time, the magnitude of the move higher is much lower level. So this is the fourth time. And what do you think is going to happen now? Well, in our view, this is going to happen now. Okay, so tomorrow, this is what the Federal Reserve is going to say. We're going to slow down with rate hikes. Market initial reaction at 2 p.m. tomorrow, December 19th, 2018, is going to be up at 2 p.m. So, check out your screen, maybe 205, 210. So the market's going to look like everything is in the green. And all the bulls, guys, all the bulls, right, that were telling you this for the last couple of months, they're going to be celebrated, right? All the bulls, all of our bull friends. That what are they going to be saying? Oh, dude, I told you it's the earnings, man. It's the fundamentals. Man, I told you everything still looks good, okay? The markets have come down so much, they had no other way but to go up. And, of course, I told you about the Santa Claus rally, and I told you the markets never break their support levels. Yeah, they did so many times in the last 100 years. It's crazy. And this one should be no exception. So that's going to be the initial reaction. And the bulls are going to be celebrated. Unfortunately for the bulls, the market is going to wipe out those smiles pretty quick because the true reaction of the market is going to be revealed by 4 p.m. So you will see a spike higher initially, followed by a huge sell-off. Now, the sell-off could be indeed ridiculous, like to the extent of maybe 1,000 points on Dow Jones. Now, I'm not necessarily saying that it's going to happen exactly to the magnitude I am describing, but we are predicting that the reaction is going to be like this. Now, if the magnitude of the reaction is not going to be as large, we are actually believing that the next day on Thursday, the stock could try to go higher one last time before a major drop. So be prepared for initial reaction higher, followed by a reversal lower. So a more important question is what will happen after tomorrow? So after tomorrow, over the course of the next 30 days, expect a market correction of 10 to 15%. Hey guys, if you have any questions about charts, about our 13 markets move formula, if you have any questions regarding stocks, options, or financial markets, feel free to schedule a 20-minute free complimentary trading options session where you will be able to ask any questions about trading stocks or options, or specifically if you're trying to figure out more information about how to trade weekly options expirations. So take action now, get all your questions answered so you can make the next year, 2019, your best trading year ever. Thanks for watching. I'll catch you guys in the next video.